Hello fellow traders, welcome to another episode of the series. Thank you very much for your support and for subscribing to my channel. In today's episode we will discuss about trading in different time frames. This is a headache, especially if you are new in trading. I have already opened some markets. We are in the GBP yen. I intentionally choose that pair. I wanted to show you some different trading opinions and some mixed trading signals. In this episode we are not showing how to analyze the market. I will just show you some examples in relation with different time frames, and in the end how on earth should I choose the time frame. Keep in mind that the basics behind it. The bigger the time frames, the longer you will stay in a trade. Of course, the more profits you'll get. Keep in mind swaps, if it's in your favor, if it's not, depends on the trading that you are. If you are trading binary, keep in mind also commissions if you are trading anything else. So getting bigger time frames have some pros and some cons. The positive aspect, you don't have to check the charts every 5-10 minutes, 1 hour. You don't care so much. It's less stressful. It's considered less stressful. The bad aspect, it takes too long. In my opinion, this is something that I personally believe. We need a system that is able to generate trades. I wouldn't mind trading the 10-second period if that was profitable, or if I was able to trade in bigger periods, or at least until 4 hours, maybe daily. But imagine trading in a month, and this is the reason that I have opened the GBP yen now. We are on the monthly chart. How many candles should wait? Approximately, many people will agree, will disagree. There is no standard number of candles. The market might stand in a point for several hours, days, or weeks. Is not sure if it will come into your favor or against you. That's not a problem, because if it goes against you, you will lose the trade, go to the next one. But sometimes the market will stay there, and this will make you feel anxious, and you are not sure what to expect. This is part of trading. Everything is part of trading, as we discussed. Now, the basic rule, how you should start, by choosing the time frames. Remember that the bigger the time frames, the bigger the profits. What I mean that you should get bigger moves, and this is something that is less stressful. Okay, some people are good with that. Others need trading the 15 minutes, 30, 1 hour, and so on. The first thing that you should do, and this is, we come into our example. We are on a GBP yen. There is a reason that I choose that pair. Now, we will go to the biggest possible duration. I have opened the monthly candles. You understand that from the first sight, let's say, you can recognize some movable support and resistance. So you might choose to get these lines, which I hate, and they mean anything. I mean, you can draw them at any point, and that's okay. You think you are traders, but you are not. We might have a potential triangle here. I have already explained what's a triangle in trading. So my first idea, my first view, is to take a short position until the next movable, and we will take the stop loss here and take the profit here. It's approximately a 1 to 3. Based on that risk reward, we are good to proceed the trade. Remember, we are in the monthly. What I will do before I enter the trade, let's open an indicator. Why not? I hate them, but let's open one. I will open a MACD. Let's see if the MACD can help us determine. No, the MACD shows exactly what we see. The signal is up. The line is, the indicator shows us a buy. It's not helpful. I will delete him. Let's zoom in. Let's go to the weekly chart. Let's see if we can get something there. Not pretty much. The weekly start to looks like the monthly. Is not helping me to determine a trade. The opposite direction would someone say that we might have a breakout, so the prices will continue to go in the higher point, so we'll give it this direction, so we have a long position. You understand that now that we are determining the different phases, opinions and line start to appear everywhere in our chart. Delete them again. We still are not sure if we are going to go short and long, and this will appear every time that you are trading, in every trading, until this becomes like an idea, until this becomes something embedded so hard inside you that you will be able to determine a trade or not. If you are not sure, change something else, go into a trade. Again, if you are not sure, wait. This will come in time. Now, in weekly chart, we see that it broke the previous structure. So, might someone say that it's an opportunity to go long, at least as we are zooming in the time frames. I will keep on the daily. In the daily chart, indeed, in this market, I was considering to go long in continuation of the trend. So probably we see that this point is a good entry point and will give us a 1 to 3 risk reward ratio, 1 to 2.5. Until the next stop we cannot risk sorry, this is our trade because this is the point that we will enter. This is approximately 1 to 5, very good risk reward ratio. We will leave our trade to breathe a bit more. We became it 1 to 2, that's fine. Now let's zoom in a bit more to check, because now we are in the daily chart. I will go to the 4 hours chart. Now in the 4 hours chart, we are still seeing that it's pretty much the same as the previous one. We do have some movable resistances at this point. I am drawing lines. Many people will disagree with that. I do not also trade them, but will give you an idea, because what happens optically, there is a mechanic behind it. So I have already explained that. So you see that at this point, even though we are considering to go long, and we zoom in a bit more in the 1 hour chart, we will see that we have a down trend at least at this point. Now remember, when you are drawing your lines, that they might mean nothing. Now at this point, either the prices will jump to this point and then go down, or they will spike up based on the previous time frame. Now let's go to 1 hour. Let's go to 30 minutes. Now in the 30 minutes chart, I do not worry so much. I will do a very fast trade at this point. I will do get a long position. I will put my stops here, and my take profit will be here. So now the see how we change positions from long to short, from short to long, and this is how the market is structured. This is the difficult part. Let's go to 15 minutes. 15 minutes is a good time frame. You don't have to wait forever. So this is also depend from the spreads that you are getting from your broker. The more trades you do, the more you are helping your broker. Just keep that in mind. You cannot do otherwise, but this is how it works. Now, when you are having a system, or you are having a trading technique, either it's an indicator, or it's not an indicator, or what you are using, or you are expecting the news, you want to combine with some previous prices and so on. Take in consideration all the time frames by starting with the bigger time frame. As you zoom in, your opinion will start to change, and this is normal. Choose the time frame that you want to make the trade. I will go to the 1 hour chart and I will choose the 1 hour. I will be benefit if I went long at this point. The reason is that probably the prices might jump from this point. So now we have a better idea when we use two time frames, like the 4 hours, the 1 hour and the 30 minutes. If you go to the 50 minutes, considering a short trade at this point, you see I'm drawing lines, and at the end we will have something, we'll have a beast, we will have a monster full of meaningless lines, and this is exactly what we don't want. We want a clear trade, something like when we are breathing. We don't want to mess around with things that we don't understand. So far, you see how the up became down, and how the down became up, because starting from the 15-minute chart, let's do the opposite direction in this trading. I will choose from the 15 minutes chart. You can stick in one time frame. The problem with doing that, most of the traders are checking the 4 hours and the daily. Statistically, make a picture in your mind. I mean, the daily chart makes more sense. I mean, what was the range of the day? Most people check that. Most people that are willing either to trade, or people that like banks are willing to take a decision because they do want currencies. They need to buy currencies, so they are not always taking decision based on price. They are thinking more structural in their base. But when we are talking about the retail traders, we need to take a decision. Let's go to the 15 minutes chart. 10 out of 10 traders would say that we have a strong downtrend. So what we are expecting here is to go short. Let's zoom in, let's zoom out this time, go to the 30 minutes. It's still a down. Let's go to 1 hour. We almost have the same. Let's go to the 4 hours. We almost have the same. So by changing so many time frames, we see that we are good to proceed with a short position at these time frames. They are all aligned together. But let's go to the daily. You see that things start to be a bit different. Now it shoots like up. This is the confusion. That's what I told you. This will come the mess. And this will come with a problem when you want to define a trade. Now, based on the daily, these are the limits, the prices, where the price ranged. Like the prices was magnetized at this point. I will do a better line. It doesn't matter. You need to understand the idea. Don't be exact with your numbers in trading. You don't have to do that. We say that market loves round numbers, and always respect the previous structure. Most likely it will react. Now these are our limits on the daily. Now checking our 4 hour chart, if we wanted to take a short position, we would be okay. I mean, we still have room until this point. Of course, keep in mind, we say that many times, nothing is written in stone. No one can guarantee that the prices will hit this point, or they might retrace at a several point. Remember that I'm not showing you a technique or strategy. I just try to be to take any kind of opinion, a different opinion, when we are changing time frames, and this will become easier into your mind if you get familiar and if you get experience. Trading, it has to do a lot with experience and to understand. Now you still have a room, let's say, to take the short position. Now a person that has looked at the daily chart most likely would go long. We would both make profit. Either we would go short or long. What's the reason? Because I would choose a small period that I would go short. check on the 1 hour chart. I will again draw some random lines. As many people will claim, I also claim the same. They are random lines, they mean anything. Again, they are showing some wavy market movement. I do not disagree with that. I do not discard the lines completely, but it's something optical. Now, I would choose to go short at around this point because I know that the prices might jump higher or lower. I will also check the news if there are significant news for the particular pair that we are checking. If you are not, if you are trading commodities or I don't know what exactly you are choosing to trade, this is a very important part. Now it would be easy to trade until this point, and I would have a very good risk-reward ratio. Why not? It's a 1 to 5, maybe 1 to 4.6, something like that. So you see that even if we choose to go until the lowest point, someone from the daily that would take a long position would always be right. Remember, the prices might not even come closer. I mean, they might respect the initial triangle that we have on the monthly chart, and just the prices will shoot at the direction completely opposite of what we predict. This is an asymmetrical triangle, so we don't know exactly where the prices will go. Now, think smart in your trading and don't think like rabbits. Take this first, the first thing in your mind. Okay, what is the triangle? We have already explained that. We trade based on that? No, but it's still something that we can keep in mind. It is a signal. We do not disagree. Sometimes they work, sometimes they won't. But keep a note on that. So we have the first element. Do we have any second element? Do we have any indicator that we can use? Let's go to 4 hours. What indicator should I use? We have analyzed all of them. I put MACD. I will put an RSI for the difference today. And to show you the example, it's oversold. So most likely I am waiting the prices to jump a bit higher. So we are good in our prediction and still going short, but we are waiting for the retracement. Let's delete this indicator. Switch, insert, indicators. What is the one we want to choose? I will choose randomly. I love Ichimoku, why not? Okay, what do we have here? The idea is completely different. The prices might jump until this point. But remember what I've told you with the Ichimoku. I do this small thing. I double the values because I can. I told you that I do that. Okay. Even though with double values we have a lot of room to retrace. So our entry point on the 30-minute, 1 hour and 4 hours, because it will be the same, it's almost here to the cloud. You see now how things become mixed. Changing the indicator will help you again to define a position. So where should I enter and where should I exit? This is the major problem. That's why you need to understand the market. You need to understand what you are trading. Should I use the Elliott waves, and from what point should I start counting my wave? What is my A, B, C, D, E, F? How many waves is my market? There are too many informations. My advice to you, start checking from the biggest time frames, and when you see an alignment, by switching to smaller time frames, it's time to get into a trade. Do not expect all the time frames to be to have the same signal. For example, if you want to go long, don't expect this to be happening in all time frames. Choose one time frame, but don't necessarily stick to that. Keep the basics of what we are trying to say when you are changing time frames. It's good to have a better view by playing with the time frames. Also, there are some platforms that give like 3 days or 45 minutes or 10 minutes. You see that a time frame is just a time frame. You need to understand what is the range of prices behind it. And sometimes the 4 hours will be the same with the daily, and most likely with the weekly. I will give you now, I gave you this example of GBP yen. But the reason was that asymmetrical. And most traders would agree, by choosing a direction, it doesn't necessarily mean that you are in the right direction, or also it doesn't necessarily mean that you will win the trade. You don't care so much, trust me. You need a good risk-reward ratio. So at this particular pair, coming into a conclusion, what on earth should I do? Should I go long or short? Well, that's what we explain. Checking the smaller time frames until the 4 hours, you could take a short position. It doesn't matter if you are lose it. You took a short position at 1 to 5 risk-reward ratio. So you will be fine even if you lose it, because you will catch the next one, and I can guarantee that. Check my videos on losses. We lost 5 or 6 consecutive losses in our account. We are trading only one account. This is the purposes of this series. That's why I have created this account. All profits will go to you, to my subs. I have already told you. And coming into a conclusion, change time frames can be very confusing. The up might become down, the down might become up. Try to search some time frames that are aligned together. If there is no such a thing, and if you are confused, take a break, change, don't get into the trade. Many traders have different opinions when we are analyzing the market. We are not making all money. Remember that the 95% are losers, so you need to think differently when you are willing to enter a trade. Thank you very much. I hope it was not a big video. I wanted to show you how to do and how to time frames can mix things. Again, I hope I'll see you in the future, and trade safe.